Hello, welcome to the weekly technical analysis review for Wednesday, October the 24th. I'm Rafi Bayajan, currency analyst at XM.com. The pairs we're going to be looking at for this week are the euro dollar, the USDCAD, and dollar Swiss franc. Starting first with euro dollar, we can see that the near-term bias for the pair is looking rather bearish at the moment. The RSI is sloping downwards. It hasn't quite reached oversold levels, but looking at the stochastics, both the percentage K and the percentage D lines are hovering near oversold levels. At the moment, prices are hovering near 2 months lows, just below the 78.6% Fibonacci retracement of the uplift from 1.13 to 1.1814. So that's around 1.1410. Further declines, we could see potential support coming from 1.1365. That was previous support back in August, and then drop below that would open the way towards that 1 year low of 1.13. A breach of that 1.13 handle could possibly signal a shift to a more bearish outlook in the medium term, with the next support coming from 1.11. That's the 138.2% Fibonacci extension. However, if we were to see a reversal to the upside, we could potentially see resistance coming from 1.1450, and then above that, a key resistance to watch out for is the 61.8% Fibonacci at just below the 1.15 handle. Above that, another critical resistance level is the 50% Fibonacci at 1.1557. Not too far above that is the 50-day moving average at 1.1588. A break above the 50-day moving average would possibly help to erase that short-term downside pressure, and it would also maintain that neutral picture in the medium term. Turning now to the dollar CAD, we can see from the RSI that the upside momentum has been easing, with the RSI flatlining above the 50 neutral level. If you look at the MACD, though, the histogram has turned positive in the past few days, and the histogram remains comfortably above its red signal line. However, there is strong resistance coming from that descending trend line. It has been capping prices for the past 3 days. If we were to see a sustained rise above that descending trend line, that could possibly be a signal of a shift from that medium-term bearish outlook to at least a neutral one and possibly a bullish one. However, we're likely to see resistance coming from 1.3170. That was an important resistance level during the summer. Above that, we have the August peak of 1.3225 and then 1.3288. That's the peak from July. So prices will need to overcome those resistance barriers before trying to challenge that 1 year high 1.3385 from back in June. To the downside, though, we could see prices breaking below that immediate support level of 1.3073. That's the 23.6% Fibonacci retracement of that longer term uplift from 1.2060 to 1.3385. So a drop below that level, we have the 50-day moving average at 1.3011. A breach of the 50-day moving average would shift the focus back to the downside, and we could then see the next key support coming from the 38.2% Fibonacci at 1.2879. Sharper declines would open the way towards that 4.5 months low 1.2785 from back in beginning of October, and then below that we have 1.2723, the 50% Fibonacci, and drop below that 4.5 months low would also confirm that medium-term bearish outlook. Finally, having a look at the dollar Swiss franc pair, we can see another pair which is trying to overcome a strong resistance. Looking at the RSI, it's holding just below the 70 over support level. Looking at the stochastics though, we can see that upside pressure has been easing over the past few days. So that strong resistance is coming from 0.9980. Prices have failed to break above that level since earlier in the summer. If we were to see prices crossing above that level, we could see the dollar Swiss franc making a run towards that 14-month high of 1.0067 from back in July, and could also signal the start of a new longer-term uptrend. However, if that resistance level holds, prices could soon reverse downwards towards the Tenkan Sen line of the Ichimoku cloud at 0.9913. Not too far below that, we have the 20-day moving average, potentially that region, suggesting that region is a strong support level. So drop below that support zone could see prices heading back towards the Ichimoku cloud and towards the 50-day moving average at just the 0.98 handle. A drop below 0.98 it would weaken the upside momentum. In fact, it would help shift the near-term outlook to a more bearish one. And then further down, another support could come from the Kijun Sen line at 0.9760. And then drop below that, we could see prices spiraling downwards below the Ichimoku cloud and towards that 5-month low of 0.9541, which we saw back in September. Looking at the medium-term picture, prices have been trading sideways since April. So we could see a break above those ranges would only come if prices were to break above 0.9980 and below that 5-month low of 0.9541. That's it from me. Thank you very much for watching and have a great day.